Financial experts claimed silver was stagnant capital. They suggested the surge had vanished. They recommended you walk away, seek out alternative growth, perhaps something more modern, something better, suited for a wealth plan built by analysts who have never touched physical bullion in their entire existence. Yet here we are witnessing the metal perform exactly as it usually does when the mainstream is looking elsewhere. It tightens, it clenches, it stores potential like a heavy spring being forced down by hidden pressure. And then, when the general public least suspects a move, it ignites in a way that leaves everyone asking the same thing. Why did I fail to see this coming? A quick favor before the deep dive. I'm building a significant resource here at Commodityadvisor that involves fighting against the static, the recycled clips, and the platform biases that hide authentic market logic. If you appreciate our perspective, aid our growth by subscribing and leaving a thought below. For the rapid updates that do not always require a full video, join our digital circle and follow us on our social platforms. Links are in the description. Now let us get into the core. I want to frame the situation properly because the activity in silver currently is not what it appears to be on the surface level. Scrolling through a chart, you likely see flat action, jagged and uncertain. A specific price movement that makes impulsive speculators lose their focus and hunt for the latest crypto trend. But here is the reality concerning silver. This metal is a master of deception, not out of malice. The personality of silver is simply built for misdirection. It creates a state of boredom just before a massive explosion. It triggers panic exits right before the leg higher you anticipated. It penalizes the hasty and enriches the persistent. Right now, silver is traversing one of those cycles where surface metrics reveal nothing, while the deep undercurrents reveal everything. Every dip is being absorbed faster. Every peak is being sold with less conviction. The volume flow has that specific tension seen right before volatility expands significantly. The mystery is not if silver moves. The mystery is which path it takes, the magnitude of the run, and who gets liquidated on the wrong side. So within this analysis, I will do three specific things. First, I will explain the global economic gears quietly grinding against each other and why most observers misinterpret those forces. Second, I will dissect the gold-silver ratio and show why this single metric is the premier alert for the entire metal sector today. Third, I will look at the massive retail influx accelerating behind closed doors and what it implies for price, stocks, in the coming quarters. This is not just about technical indicators. This is about decoding a market that has tricked more participants than almost any other commodity in history. We begin with the big picture because without context, you are just guessing. This metal does not trade in isolation. It survives and pulses based on three specific inputs: adjusted yields, currency strength, and the endless battle between terror and avarice in the global mind. Here is the reality. Central bankers spent the last few years attempting to project power. Price pressure ran high. They lifted rates sharply. They promised everyone they would maintain pressure until the objective was met. For a period, that story worked. Adjusted returns climbed. The dollar held territory, and silver along with gold suffered because holding a non-dividend asset felt like a losing game. But something broke. The story is fraying. Price pressure cooled from the highs, but it has not disappeared. It remains rooted in the sectors that hit your wallet. Services, payrolls, the expenses that define your daily life. Growth is stuttering without crashing. Now policymakers are trapped in a spot where they must sound strict, yet they are internally terrified of causing a systemic failure. The markets recognize this. This is why we see these fierce shifts in rate expectations. One day, speculators bet on massive cuts. The currency dips, bond returns drop. Silver finds momentum and rockets. The following day, a central bank rep delivers tough rhetoric. The restrictive for longer theme returns, and the metal gets crushed by high-frequency funds and algorithmic tools trading the spread. This is why the tape feels so erratic, messy, explosive, and draining for anyone missing the core mechanics. This asset is not wandering. Silver is essentially a geared bet on the next policy U-turn. Right now, the collective mind cannot decide the timing or the depth of that shift. That doubt is baked into every single tick you watch on your screen. Now here is the pivot, because most view this as just a metal for survivalists. While true that silver handles the crisis trade well, rising when money is ruined or governments act recklessly, gold usually takes the crown. Gold is the prestigious one, the central bank reserve, the asset for serious institutions, but silver is the high beta alternative. It moves faster and more aggressively once the masses finally rotate into hard assets. Yet there is a variable that flips the script. This is not just money, it is an industrial essential. This split personality creates a landscape of potential that gold does not possess. Think about it. Silver is a mandatory component for the systems rebuilding our world. Photovoltaic cells require silver. Electric transport needs it for conductivity and sensors. Communication networks, high-performance computing, healthcare tech, all of them consume the metal. The policy path of the West is locked into this transition. More solar energy, more electric fleets, more grid modernization. That is not a theory. That is capital already deployed. States are funding these shifts. Firms are erecting massive plants. The groundwork is laid for a society that demands more supply, not less. So when silver looks stagnant, you're not seeing a dying trade. You are seeing a tug of war between the hedge buyers and the industrial users. You are seeing smart money buying every dip because they grasp that the demand structural story is intensifying. You are seeing novice traders getting destroyed because they forget that silver does not climb stairs. It leaps or plunges after long bouts of annoyance. We are in that annoyance phase, storing energy for the next surge. Let us discuss the indicator that professional metal speculators have tracked for decades. The gold-silver ratio. It sounds technical, but it reveals the deep positioning of the market. This ratio tracks how much silver is required to acquire 1 unit of gold. When the figure is high, silver is undervalued. When it is low, it is overextended. Basic math, massive consequences. Historically, when this relationship hits an extreme, it snaps back violently. That correction rarely happens by gold falling. It happens by silver launching into a massive catch-up rally that shocks the uninitiated. For years, this spread stayed at record highs. That was the signal that silver was the neglected underdog. Too cheap, too forgotten compared to its golden sibling. Here is the kicker. Current reports show this spread is tightening. We are hitting levels not touched in over a decade. This is not a fluke. It is the market finally acknowledging the mispricing and initiating a correction. But mean reversion is not a straight line. The ratio can stay distorted longer than you can stay solvent. It can offer fake signals. When it finally breaks, it moves at a speed that causes vertigo. Is this the definitive move or another trap? No one has a crystal ball, but the evidence is stacking in favor of a massive silver catch-up. The spread is shrinking. The macro backdrop is shifting toward metals. The industrial appetite is permanent. That is not a promise. It is a high probability setup, and that is all a trader ever gets. Look at the ground level data, because the physical market is displaying something wild. Silver has been on a trajectory that seemed impossible years ago. We are looking at an asset that surged nearly 300% recently. We have prices hitting historic peaks above the $100 mark. We are witnessing a retail rush that the mainstream media is largely ignoring. Look at the metrics. Bullion shops are reporting massive volume. One distributor saw a 150% jump in coin sales in just months. Demand for large bars surged over 500% in that same window. These are not minor fluctuations. These are shifts that happen when the public changes its view on the nature of value. It is not just sales. Digital searches for physical silver buying or online silver shops have climbed 200%. Searches for silver price are up significantly. Most telling? Interest in the gold-silver ratio has gone parabolic. That signals a massive spike in general awareness. What does this indicate? The public is waking up. Not the big banks, though they are involved, but the regular stackers. The people who held through years of nothing and are now seeing their logic confirmed. The psychology is simple. When gold becomes too pricey for the average family to buy, they look at silver. It becomes the reachable entry point for the metal bull market. Gold has moved beyond the reach of the middle class, making silver the gateway. But there is a danger no one discusses, and I need to be the realist here. Silver is volatile. Not slightly, but extremely. The traits that make it boom also make it bust. With a market that moved this far, a sharp retracement is a real threat. If the Fed stays rigid, if yields stay high, or if the economy hits a wall that dents industrial use, silver can see a purge that cleans out the latecomers in a week. That is not a forecast. It is a map of how this asset behaves. The winners in this space are those who expect the volatility. They manage their risk. They do not buy the top. They use the red days to build their stash. Most importantly, they have a vision beyond next Friday. If your logic is that debt is unpayable, that currencies are failing, and that the tech revolution needs silver, then a dip is a gift. It is the market offering you a discount while others panic. But if you're trying to get rich by Tuesday, silver will ruin you. It will shake you out at the low. It will trick you into buying the peak. You will end up claiming it is a rigged game, when the truth is you just did not understand the asset. Let us talk about a major decision. Physical bars or mining equities? This is a vital choice with no single answer. Physical metal is your shield. No risk of bank failure. No CEO making mistakes. Just pure value sitting in your vault. The downside? No yield. It just sits there. In a world with high interest, there is an opportunity cost. Plus, you have storage fees and buy-sell spreads. Mining companies are the sword. They offer geared exposure. If a firm produces silver at a fixed cost and the price rises, profits explode. In a bull run, they can beat the metal 5-1, but they have risks unrelated to silver, bad management, rising labor costs, tax hikes, share dilution. Political instability in foreign lands. I've seen the metal rise while the companies crater because of internal mess. Physical is your base. It is the part you ignore for years. Minors are your tactical play. They need work. You must study debt, geography, and leadership. My method? Heavy on physical, selective on minors. Do not bet the farm on a single stock. So what is the next step? Silver is currently ranging. It is resting after a sprint. Is this a breather or climax? Markets do not go up forever. A period of consolidation is healthy. It cleans out the weak hands and prepares the next leg. Watch the zones where buyers appear and sellers exit. I will not give you exact price targets because the market does not care about round numbers. Watch the behavior. If the dips keep getting bought fast, if the macro stays favorable, the next move is likely up and powerful. If buyers disappear and the Fed stays aggressive, we might see a deep reset. Neither is a certainty. But the structural pillars support silver long term. Global debt is rising. The green energy shift is accelerating. The memory of inflation is fresh. These factors do not mean a pump tomorrow, but they suggest that owning the metal at fair prices is logical for the patient. Most people react to price. They buy the green and sell the red. Wealthy investors are proactive. They have a plan. They use fear as a signal. They accumulate when the world is bored. Silver is the ultimate test of this mindset. It will make you feel like a genius and a fool in the same hour. If you can master your emotions here, you can master any market. So tell me in the comments, are you a trader or a stacker? What would make you sell your position? Share your experience so the group can learn. Join our WhatsApp and X for the real-time updates. If this helped you, subscribe and join the mission at Commodityadvisor. Remember, when the masses are quiet, you plan. When they panic, you act. We are in the messy middle where the best chances hide. Stay disciplined. Do not let the noise break your strategy. I will see you in the next one.